Hello everyone, I'm Dr. Swati welcoming you to the global online platform. In today's lecture, we are going to cover our new unit of that is a legal aspect of a business, and here we are taking a full rapid revision with the 25 most expected MCQs. Okay, and this is a part one, and so let's start. Before we are starting, I would like to tell you about our new batches will be started from the 3rd of the June, and here you will get a complete course of the commerce and management. Daily live lectures and recorded lectures is available in the app, and the full syllabus notes in the PDF format is available in the app, and the full syllabus mock test is available, and more than 4,000 MCQ series with a detailed explanation is also available, and the PYQs with a detailed explanation is available. And here you will get a complete paper one is free of cost if you register yourself for the paper 2, and global online provide you 20% discount on the fees, so that in the 8,000 rupees, if you register yourself for the paper 2, you will get paper 1 in the free of cost. And the contact number is given in your screen, that is a WhatsApp contact number. For any query you can get in touch with this contact number. Okay, then, how to download the Global Online? Just go to Google Play Store, search the Global Online, install the Global Online app, then open it, and after that, you have to register with your number, and after that, you go to My Course, okay, and search the whatever the course you want. If you want if you want a commerce, and select the commerce course. If you want a management, you select the management course. After that, once you register yourself for the any of the paper, and then you will get all the material in a very systematic proper folders with the unit wise is available, the videos materials, okay, we recorded videos material, and the notification of the online live classes you will get updated. Okay, so let's start with our first question, because we do not have much time. Okay, in the very less time, we have to cover maximum question as much as possible. Let's start with the first question. What is the primary object of the Sales of the Goods Act in 1930? What is the primary objective? The first option, that is regulating the export and import of the goods. B, ensuring the fair competition, defining the right and obligations of the buyer and seller of the goods, and establishing the quality of standard of the goods. So I am just started our first question with a very simple and a very easiest question, and after that, gradually I'm going to be increasing the level of the question. Okay, higher level of the question. Okay, so this is because, yeah, this is just a warm up. Okay, now, so what is the right answer for this question? Yes, you know that is a defining the rights and obligation of the buyer and the seller of a goods. That's why this is the objective of the Sales of a Goods Act. Clear? Now, what right allow on unpaid seller to sue the buyer for the agreed upon the price of the goods, even if the property in the goods has not been passed to the buyer? Okay, the question is about, if you are an unpaid seller. If you are unpaid seller, that means you haven't paid. I haven't. The unpaid seller means there is an A person and B person. Okay, A is a seller and B is a buyer. So, buyer purchase a goods from the seller, but he haven't paid any money to the seller. So, this seller is called as a unpaid seller. So, what is about the right of the unpaid seller? What right allowed an unpaid seller to sue the buyer? Okay, sue the buyer for the agreed upon the price of a goods, even if the property in the goods has not been passes to the buyer. Okay, if the property is not passes to the buyer, it is a right of the unpaid seller to sue the buyer. So what is the condition? That is the right of the right to lien. Option number B, right to resell. Option number C, right to sue for the price, and right to stoppage in transit. So what is the seller's right? Yes. Option number C, right to sue for the price. They having an authority, he can sue for the price if he is not delivered his goods. Okay, property to goods. Okay. Yes. Now, next question. When does the risks in the goods passes to the buyer in the contract of sale of a specific assertion? So, what is question? The question is about the risk. Okay, risk in goods passes to buyer in a contract for the sale of specific or the a certain goods. Okay, specific goods means the goods having a specific category. Okay, that is a specific goods, like you want a horse. Okay, you want a horse, so this is a horse is specific goods. They are specify that this goods you want, that is a specific goods. So what will be the right answer? Yes, it's a at a time of a delivery. Okay, now next question, on attaining the age of the maturity, a minor agreement. What is the on the age of maturity, that means if the a person is a minor, okay, and he comes to an agreement when he was a minor. Okay, so and after that the agreement is fulfilled after the 1 month. Okay, after the 1 month, and after 1 month he is become a major. Okay, so what is this saying? On the attaining the age of maturity, the minor agreement is okay, when he make a agreement, he was a minor, and when after that in between the duration of the agreement, he become a major. That means he is under 18 when he has he's come to an agreement, and he is completed his 18 when he's come to an between the agreement. Okay, so what is actually the question is, what is happen, what is the minors agreement at that condition? So this is a really important question. The option number 1 can be ratified by him. Option number 2, that is cannot be ratified by him and become a void, become a valid. So what will be the right answer? The right answer is option number 2, that cannot be ratified by him, because this authority is authority is given by an special allowed, an agreement is a minor is a void. That is um this is not a the special agreement he has to pass for the majority become a major. Okay, so that's why they cannot be ratified. Okay, option number 2. Now the from the this onward, we having a very complicated questions, which is really important. Now the Competition Act Competition Amendment Act 2023 revamped the Competition Act in which the following perspective. So option number, the statement 1A is given, that is the CII, that means Competition Commission of India. Okay, CII to be the intimated if the value of the merge and acquisition deals exceed the rupees 2000 crore. Statement number 2, the overall timeline for the assessment of the combination has been reduced to 150 days from the 210 days. And the C, that is the exclusive selling agreement, has been placed with the exclusive dealing agreement. And and the D statement, entity who are not engaged in identical or similar trade shall also be part of anti-competitive agreement under the section 3.3. And anti-competitive conduct like a tie-up agreement, resale price maintenance, and the exclusive agreement, the distribution agreement, and has been defined. Okay, so what will be the right answer? First of all, you have to understand that is what is question. The Competition Amendment in 2023, okay, is revamped with the competition in which of the following perspective? Okay, so in this question, there is an amendment is passed in the act in the Competition Act, that is 2023, which is given in this section 5 and section 6. Okay, now the first statement is the CII. Okay, CII need to be intimate if the CII means Competition Commission of India needed to be intimate if the value of merge and acquisition deal exceeding the rupees 2000 crore. Yes, this is a right, ma'am. Okay, so the Competition Commission of India, they have to before they are merging, okay, before they're merging, they or amalgamating, they have to if their merging acquisition amount is greater than or the exceeding 2000 crore rupees, then he has to report to the Competition Commission of India. Okay, and statement number 2, the overall timeline timeline of assessment of the combination has been reduced to 150 from the 210. Oh, yes, ma'am, this is also true. The before the time limit was given that by the CCI, that is 210 days, but now it is rectified. It is now reduced to 150 days. Yes, this is also true. And after that, the exclusive selling agreement has been replaced with exclusive dealing agreement. So what is happening? It has it has also provided broadened scope of the definition, and actually here the competition replacing the exclusive supply agreement with the exclusive dealing agreement with an intention to cover the selling side. Okay, of an exclusive agreement, and not just to purchase a side of exclusive agreement. Okay, so here it for the selling price, they are not for the purchasing side of the agreement. That's why for the selling, exclusive selling rate has been replaced with exclusive dealing agreement. So this is also true. Then the entity uh, who are not engaged in the identical or similar trade. Okay, if the A person having a different trade and B person having a different trade, shall also part of the anti-competition under the section 3, because they're covering the two, because in the anti-competition they having a tie-up arrangement and the resale price of maintenance, and in this case the exclusive distribution has been redefined. Okay, so actually this provision is about to an it's about to applicable to an enterprises and association of enterprises or any person who is engaged in identical or similar business. Okay, and it shall be presumed to be the part of a such agreement. Okay, like a anti-competition agreement. Okay, and if it is a participated in intent to participate in the further of the such agreement. That's why the option number D is also true, and D is correctly explained the option number E also. So that's why A, B, C, D, E, the fourth option is right over here. Clear? Yes. Now next question, a letter of acceptance sufficiently stamped and duly addressed input into the course of the transmission. There is. So a letter of acceptance. Okay. The letter of uh, acceptance sufficiently and stamped and duly addressed input into the course of the transmission. The first option, the contract voidable at the option of the acceptor. The contract is voidable at the option of the offerer. Okay, and the no contract at all or the valid contract. Okay, so here a letter of acceptance is sufficiently stamped and duly addressed into put into the course of transmission. That means the letter of acceptance is sufficiently and stampedly due the address. So it is a what? It is a valid contract, because everything is going in a legal formal. So that is this is a valid contract. Clear? Next question, if the population of the information is rejected. Okay, what is the if the application, if the application of the information is rejected under the Right to Information Act in 2005, the CPIO and SPIO, that means Central Public Information Officer, and the State Public Information Officer is obligated which of the following to furnish the person seeking the information. Okay, the person seeking the information. So in that case, what is the question is about this talking about the right to information. Okay, the Right to Information Act of 2005. If the application of information is rejected, okay, if your application is if the for some person is giving the right to information letter to the some person in the office, okay, and it if this letter is going to be rejected, so what is the obligation of the CPI, that is Central Public Information Office, and what is the obligation of the State Public Information Office? So what is the role of this? They're having the responsibility of providing to the citizen the information requested by him. This is an obligation of the CPIO and the SPIO. Okay, so this is an obligation. Now, the furnished person seeking the information. So what they have, so option number one, that is power and function of information commission, reason for such rejection. Okay, they have the need why they reject their application. Okay, after obligation of public authority, then the D, the particular of the appellant authority, and the period within which an appeal against such rejection may be preferred. Okay, so what is the right answer for this question? That is, right answer is option number 4. Okay, why option number 4? Because 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 they want, if they reject the application of an applicant, okay, what happened, they needed to they need a reason why they reject their application. Okay, in the right to information act. Okay, so this is the reason they have to submit, and after that, the particular party of appellant authority having authority um, to inform them to why they rejected their application and the period within which the appeal against such a rejection may be preferred. Okay, and we are in they see the time limit. Okay, within which then appeal against such rejection may be preferred. So these are the condition where they reject the application, and the application will be formally rejected under the rights. Okay, so the option number 4 is right answer. Okay, now the next question which is in your screen, that is, the doctrine of the KV temperature applies in which of the following situation? You know that what is the meaning of the KV temperature? KV temperature means buyer be aware. Okay, so this is a KV temperature. Okay, let's the buyer, like you can say, let's the buyer be aware. That means and any individual buy at their own risk. Okay, they have to buy if they do not disclose, if the buyer does not intimate disclose his purpose to the seller why he is purchasing that goods, and depend upon on his own risk and judgment. Okay, so it's all depend on his buyer's judgment. Okay, because he not disclose his what he want to the seller. Okay, so in that case the KV temperature is applied. So option number first, when goods are sold by the description, when goods are sold by the sample, when goods are sold under the implied condition and warranty, and when the buyer do not intimate the purpose to the seller and depend upon his own skill and judgment, in that case the doctrine of the KV temperature is applied. Okay, so the option number 4 is right, because the buyer do not intimate the purpose of why he is purchasing that goods, what the wants he, what the need he, why he purchasing the goods, why the needs behind of their goods. So he not there, if the seller, if the buyer do not disclose it, so it's solely depend upon the buyer skills and judgment. So the option number 4 is right over here. Now a sale a mobile phone to B. Okay, a minor who pays for it by his check, A endows the check to C, and who take in the good faith and for the value. The check is dishonor on the presentation, and C is enforce the payment of the check. So is the question is talking about his A person selling the mobile phone to the B person. And what is it? B is a minor person. Okay, and he pay the check. Okay, he take a check and he took a mobile. Okay, now what happened? A endorsed the check to C. Okay, the A give the check to endorse to the C. The C is a person. Okay, and who take it in the good faith and for the value. He's thinking that yes, this is a check is given by the A, and he is a major person. If he's selling also, he's take it in the good faith. What happened? The check is dishonor. Okay, on the presentation, when he present in the bank, the check is going to be dishonor. So what happened? Can C means an endorser. Okay, C enforce a payment of the check. Okay, so he can C enforce a payment of it is an the C is or the question is about is talking about the either A is eligible for the payment of the check, or the B is liable to pay the check payment of the check. So statement is given, C can enforce the payment of the check by only against the Okay, C can enforce the payment of the check either against A or B. C can enforce the payment of the check both A and B, and C can enforce the payment of the check only against the B. So what is it? Here is talking about the minors. So minors, the any agreement with the minors is an void. Okay, it is an void. In that case, option number A, that is C, is only and only liable. Okay, only A, okay, A is only and only liable to the C. Okay, so the option number A is right over here. Now, the next question, that is, statement is given in your question, that is statement 1 and statement 2. What is statement 1? The certificate of incorporation. Yes, okay, this is in company act. Okay, this is the question of the company act 2013. Okay, so the certificate of incorporation in conclusive evidence that all the requirement of the company act has been compiled with in respect of the registration. Okay, yes, in the certificate of the incorporation, all the evidence that the company are needed for the registration, all this information is given in the certificate of the information. So yes, statement number 1 is true. Now statement number 2, the after incorporation, if the company make a fresh contract, what is it? After incorporation, if company make a fresh contract in terms of pre-incorporation. Okay, so what the A company had make a two a contract over here, that is a pre-incorporation contract. Okay, pre-incorporation. What is going on? Okay, that is a pre-incorporation contract and post incorporation of contract. Okay, context. So here what is in after incorporation, after once you got incorporation, company make a fresh contract. In terms of pre incorporation of contract, the liability of promoter shall comes to an come to an end. Yes ma'am, because in incorporation of the contract is valid until the company get an it's valid until the company get a new fresh incorporation of the contract, because after incorporation of the contract. Okay, and once that once that agreement going to be cancelled or contract contract is done, then the promoter shall come to an end. Okay, the liability of the promoter is also going to be an end. So there, yes, the statement number 1 and statement number 2, so option number A is right. The statement number 1 and statement number 2. Clear? Now, an agent can be sued by the third party. Okay, an agent is personally liable to third party in which of the following situation. Okay, is about the agent. Okay, when he is personally liable to the third party, what are the condition? Because agent is a middle person. Okay, suppose A is a seller. Okay, and C is a buyer. Okay, so B is what? B is an agent. Okay, agent. Now B is playing the middle role between the seller and buyer. Okay, now the what is the situation? What are the situation comes when the third party, okay, the third party, that means a buyer is liable to the buyer. Okay, the agent is liable to the buyer. What are the condition? So the stage situation is given, that is, if an agent act for an undisclosed principal. Statement number B, that is the trade unused and custom make an agent personally liable if an agent sign and contract in the principal name, and if an uh, agent act as the name of the principal, and an agent work for the foreign principal. So here the position of the agent, which is with regards to the third party, is asking. Okay, so here it is, here, you know, here when an agent make a contract. Okay, on behalf of the seller, what happened, he need to be undisclosed principal. Okay, he has to on the behalf of the disclosed principal, and within the actual authority, he is not liable to the third party on contract, or none can be sued the third party. Or what is happening here, when it is a situation when he is liable to liable, the first condition, when an agent act for undisclosed principal. What is undisclosed principal? That means the buyer is only familiar with or only connected with an agent. He buyer, he don't do not having any contact with the seller. So what is happening over here, the agent can act for the undisclosed principal. That means here is only agent is liable for to pay. Okay, because the buyer is don't know about the seller, so he is liable, agent is liable. So option number A is here, A statement is true. Now, the trade use and customs make agent personally liable. Okay, personally liable. So this is also true, because the trade usage and custom make an agent personally liable, because he is personally liable because is used by the agent, and he is the buyer is used to with an agent, he do not having a contact with the seller. And after that, the option number next, that is, if an agent sign a contract in principal name. No, ma'am, in the principal name is signing, he is only signing in the contract in the principal name. Okay, he is signing the contract in the name of A. Okay, in the name of A, so he is liable whose name is given in the in the contract. So in that case, A is liable, that means seller is liable, so it's not applicable to the agent. Now, if an agent act of the named principal, if he is an acting as a name of the principal, in that case also agent is not liable. Who is liable? The seller is liable. Okay. Now, if an agent work for the foreign principal, okay, if an agent work for the foreign principal, in that condition he is liable. So the option number A, B, and E. A, B, and E. Option number 2 is right over here. Yeah. Yes. Now here this is then really important, because the question is from the schedule, and you have to be familiar with this schedule, because the Company Act in 2013 underline the themes is given, that is schedule 1, schedule 2, schedule 3, and schedule 4. Okay, so first I'm going to I'm tell you about the what are the schedules. Okay, schedules in the Competition Company Act 2013. Schedule first is to disclose the memorandum and article of association in section 4 and 5, both memorandum and article. Schedule 2 is for the company's depreciation, which is given in the section 1, 2, 3. Okay, the section you have to use, the section is also you have to keep in your mind, that is. And after that, the schedule 3 for the balance sheet and the statement of the profit and loss account, and the section is 120. Now, how do you remember this? You don't need to every section, every schedule, you just have to pick one or two, then you will answer, you will able to the answer for the whole question. Okay, the how do you remember the schedule number 3? That is 1, 2, 3, that is 1 balance sheet, 2 profit, and 3 loss. Okay, so 1 balance sheet, 2 profit, and 3 is loss. So in this way, this is just a trick. If you like it, you can apply it. If you're not, so yeah, it will be your comfort. Okay, now schedule 4 is for the code of independent director. Okay, schedule 4 for the independent director, the section 149(8). Okay, then schedule 5 for appointment. Okay, 5th for appointment of managing director, whole time director, and the managing director, which is given the section 196 and 197. Now say schedule 6 for infrastructure project. Okay, infrastructural project. And after that, 7 is for the CSR, that means corporate social responsibility, that is section 135. Okay, section you also have to keep in your mind, that is section the schedule 7 is for the CSR. Okay, so let's come to the question, that is schedule 1. Yes, schedule 1 for the memorandum, because we have to, first thing we have, what we have to do, that is memorandum of association. Create the company you need to create, that is memorandum of association. After that, the schedule 2 is for the depreciation. So where depreciation is for the computation of depreciation. The schedule number 3 is for the balance sheet, profit and loss. Okay, so preparation of the balance sheet, profit and loss. And after that, schedule 4 is for the independent director, and schedule 6 is for the no, sorry, schedule 5 is for the appointment of the director. Okay, so yes, the A having a third option. Okay, second having a first option, and this having a fourth, and this having the 2. So where it is in the third, 1, fourth and 2. So option number 2 is right answer. Yes. Now the next question, arrange the following step in the logical sequence in the recourse. Recourse, okay, logical sequence. We have to arrange the data in the things in a logical sequence. And now the sequence is for the dishonor of the negotiable instrument. Okay, dishonor of the negotiable instrument. So here the dishonor of the negotiable instrument is given, that is noting, compensation, protesting, notice of the dishonor, and the penalty. So you know that after doing everything, you have to pay the penalty. Okay, so option number E is over here. So the option number 3 is going to be cut. Okay, now, so what will be the first thing? What will be the first thing? That is, the first thing is, that is, you have to give the notice of a dishonor. Now, what is a notice of a dishonor? If the bill is dishonor, either by a non-acceptance or by a non-payment. Okay, there is a condition. If it is a dishonor by the, if either the party is not accepted, either the payment is not made. So the drawer, okay, the who draw the bill, and all the prior endorser of the bill are liable to holder to provide he give a notice of a such dishonor. Okay, also so notice of a such dishonor to the drawer. Clear? So here, what is, suppose A is a person, B is a person, and C is a person. A draw a bill in the name of B. Okay, and B accept it. He is a drawing. What happened when he go to the bank, that is the C, the bill going to be dishonor. So this is a responsibility of the A or the C to give a notice to the dishonor of a check, dishonor of a bill to the B. So this is the first thing that he has to do. So that's why the notice of a dishonor is a first option. That's why the A, where is D? Yes, D is over here. We cut it all. Okay, so option number A is right. Let's explain. I will going to explain you one by one. That is, D is the one. After that, noting means the holder is entitled, after giving the notice of a dishonor, to sue the drawer and the endorser. Okay, he has to sue. Okay, so what I do, the B is one, he is give the notice. So after that, the noting is given to the B. Okay, to the B, because the bill is going to being has to be dishonored. Okay, that's why the B is is liable for the noting. Okay, and noting is a convenient mode of authenticating the fact that a bill or has been dishonored. If how do you informed? How do you do notice? The notice is given by the noting to the B person. Okay, so the next step is noting, and after that the protesting. Okay, so the protesting is the formal certificate issued by the notary public, and attesting the dishonor of the bill. Okay, so that is a protesting by the Then this protesting, it's also based on the noting in which has been effective on dishonor or often the bill, and after the noting has been made, the formal protest is drawn up by the notary. Okay, so the protesting is a option number, that is in the sequence of this third sequence. And after that, the compensation is paid by the person, okay, by the B person to the A person, okay. And after that, he has to be liable for the penalty, okay. So the option number 1 is right. Where is the answer? Okay, I think I have might be not mentioned over here. Let's so the option number A here, the option number A is right answer over here, okay. 100% sure the option number A is right over here. Now, the assertion A, that is promise is an agreement. Okay. Promise is an agreement. Reason, an agreement is the sum of total of offer and the acceptance. So, is it a promise is an agreement? So, let's understand this concept because this is important. Offer, when the A party offer to the B party for anything. Okay. When the A party offer a B party for sale of mango, for sale of mango. So when it will be promised, when offer is given by A and B is accepted, then it will be the promise. Offer plus acceptance is a promise. So what is it? Promise is an agreement. And how it is an agreement? When the promise with the promise you pay some consideration. That means A promised to B to sell a mango, and B promised to be A to he pay the 5 lakh rupees. Okay, 5 lakh rupees. So this is nothing but this money is a consideration. The promise plus consideration is an agreement. And when the agreement is enforceable by the law, having an enforceability by the law, then it is an agreement. So what the question is, assertion is given, promise is an agreement. Yes, ma'am. Why promise is an agreement? Because the reason is given, an agreement is a sum of offer plus acceptance. So option number A, that is A and R are correct, and R is correctly explain the A. Clear? Now, one or more parties to a negotiable instrument act is or are discharged from the liability. When he is liable for to discharge from the liability, if the one person is having the one or more parties to the negotiable instrument act. So what is the condition? What are the condition? What are the condition when he is discharged from his liability? This discharge, the statement is given by giving the notice of dishonor by the holder, by the deliberately cancelling the name of the party and the parties, by taking the qualified, by taking the by taking the qualified acceptance, by allowing the drawee 24 hours to accept, and by material alteration, so what will be the right answer? There are so many conditions, like they have to discharge by cancellation. Okay, discharge by cancellation if they cancel their agreement. Okay, discharge by release is if discharge by release, if the party released to another party to that he is the person is not liable. So in that case, a discharge by release of the payment. Okay, discharge from release, release from the payment. Okay, release from the payment means, suppose A, B, C and D having a is are the parties. Okay, so what is happening over here? If the three are decided that D is not not liable for the any payment, in that case is discharged from the liability. Okay, and after that by allowing more than the 48 hours to accept, and after that by qualified acceptance. Okay, and after that by discharging the material alteration. Clear? So So what will the right answer? That is by giving the notice of dishonor by the holder. If the holder give a notice of a dishonor, so it's not valuable. Why holder is giving? The holder is not eligible for that, so holder is not liable. And by deliberately cancelling the name of the party, that intentionally or deliberately cancelling the order, discharging of the cancellation, so it is it is true. Then by taking the qualified acceptance, if they eligible for the qualified acceptance, this also. And after that, by allowing the droid 24 hours. No, it's not 24, it is a 48 hours. Okay, it is a 48 hours. Now then the by material alteration, if the material alteration is happen in the contract, at that time also parties are discharged from the liability. Clear? So option number B, okay, and C, this is C, yes, this is not, and E. So B, C, E, B, C, E, option number 3 is correct over here. Clear? Now, yes, this is the right answer. Now, next question. Arrange the following procedures to make the payment using the electronic cash ledger and generation of the channel identification number of generation of the challan identification. Here what is doing the arrange of the procedures to make a payment using the electronic cash ledger. So the what are the procedure of use when we use the electronic cash ledger, when we prepare the electronic cash ledger, or we make a payment through the electronic cash ledger. So the statement is given: generation of the channel identification number and the amount credited to electronic cash ledger. After that, the statement two forms of the GST PMT07, okay, correction in electronic cash ledger, challan of the CIN, that is challan identification number, and mandate for the payment of the through the NEFT and the RTGS mode, and the generator challan in the form of the GST and PMT 6 from the portal, and the enter the details and amount as per the payment rule can be deposited by using the internet banking and the debit and credit card. So, here, what is the procedure? The procedure is the first thing, that is you have to enter the detail in where, in the challan, which is a form number GST PMT 16. So this is the first step. You have selected first step, that is a D. So here, where is the weighted D? Only the third option is having a D. So the right answer is D over here. Okay, now let's explain. That is next, after you're filling detail, you make a payment. Okay, the amount as per the payment rule can be deposited by using the internet banking or by the debit card or credit card. Okay, you select whatever the internet bank, if you want to pay from the internet banking. Suppose the here is you have to like you are paying the through the internet banking, either you are using the debit card, either using crediting the credit card. So you have to select that portion. Okay, once you select that portion, after the challan, the mandated for the payment, if you are the after your, if you are the payment you are going to be doing, then if you're not selected our option, if you're selected the NEFT or GFT, you are doing the payment with the NEFT GFT, the challan CIN number is mandatory. It's a mandatory. Okay, it's a mandatory to fill the challan. Okay, challan, that is a challan identification number. And after that, once you fill the challan identification number, these challan identification numbers, and after that the amount is credited to the electronic cash ledger. Okay, the amount is going to be credited, and once they're going to be credited, the form GST, the form GST PMT 07, and the correction is whatever the correction we needed in the electronic cash ledger we made. Okay, so the option number 3 is correct. Clear? If you are not understand this question, this kind of question, you have to just look go through with the video two times, thrice, and two times or three times. Okay. Now, yes. Yes, the fourth schedule has been added at the end of this is a question. Okay. The fourth schedule has been added at the end of the Limited Liability Partnership Act. The schedule 2, okay, to entertain which one of the following. Now the schedule is given under the Limited Liability Act, and these schedules having their own specification, own description. So the fourth schedule is added in the new LLP Partnership Act. Okay, in the LLP Partnership Act. So what are these schedules? First, we have to understand this schedule. The schedule of the Limited Partnership Act 2008 are: the schedule 1 is that the provision regarding the matters related to mutual rights and the duties of the partner and the limited liability and its span. So here the duty, here is talking about the duty of the partner and their limited liability. Okay, their liabilities and its partner applicable in the absence of any agreement and such matter. Okay, and the schedule 2 is for the conversion form into the limited liability. If any firm want to convert into limited liability, this is given in the section 2. Yes, and section 3 is for the conversion from the private company into limited liability. If anyone want to convert their companies, okay, from the private company to the limited liability, the schedule number 3 is given. And if such a company is want to convert from the unlisted public company to limited liability, so the schedule number 4 is applicable. So the question is about, again I am repeating, then conversion of the unlisted is given in the schedule 4. Okay, and for the private company is given in section schedule number 3. Conversion of the firm into limited company is given in the section schedule 2, and the duties and the liabilities is given in the section 1. So the question is about schedule number 2. The schedule number 2, the provision of conversion from the into private into the limited company. This is given in this schedule, ma'am, in the schedule 3, ma'am. Okay, there, look at here, there is only 4 schedule is given. Okay, the 4 schedule is given, and after the provision regarding the matter to duly right and duties, this is a schedule, ma'am. This is schedule 1. Okay, and the provision related to conversion of the firm into limited, so it is a schedule 2. And the provision of conversion from the unlisted, this is the last schedule, that is schedule 4. So the question is for the schedule number 2, that is for the conversion of the firm into the limited liability partnership. Clear? So option number 3 is right. Now again the question I have the question for the Competition Act 2013. Okay, this is schedule. We have here with the last video, we have seen the schedule of the LLP. Now it's scheduled for the Company Act 2013. So we have already seen this schedule, that is schedule number 1 for the memorandum of article association, 2 for the depreciation, 3 for the balance sheet statement, profit and loss account, and 4 for the independent director, 5 for the appointment of the director. Okay, and after that the 6 is for the infrastructural project, and the 7 for the corporate CSR. Okay, now schedule 3, yes ma'am, this is for the balance sheet and profit and loss account. Where is balance sheet and profit and loss accounts there? The A is matched with 3. Clear? The 4 is applicable to the code of the independent director, 1. And after that 5th is for the appointment of the director, that is 4th. And the 7th, this is the last one, and this is for the CSR. Okay, this corporate social responsibility, that is 2. So we have, yeah, okay, so option number 2 is correct. Clear? Now, in which of the following cases the agreement is a void ab initiative? Void ab initiative, that means the agreement which is invalid, invalid or void from the beginning. Okay, void from the beginning of the contract. Okay, beginning of the contract, when the contract is signed, at that time, from that time the contract is void. So what are the cases? Okay, the mistake is caused by the fraud and misrepresentation. Mistake as it is to be identify the person contracted with. Mistake at the nature and characteristics of the written document, and the bilateral mistake or unilateral mistake. So what is the most appropriate answer? Here the question is about the most appropriate answer. So what will be the most appropriate answer? The word void ab initiative, that means the contract is void at the beginning if the contract is having any fraud and any kind of misrepresentation. Okay, the mistake as it is identified to the person contracted with, if the contract is made by the person and they have took a mistake, in that case also, the void ab initiative is applicable. And mistake at the nature and characteristic of the written document, the example I will give you for this, that is if there is a person, A is a person and B is a person, but B is a illiterate. Okay, illiterate person, or you can say it is unsound mind. He is a unsound mind. So what has happened? What has happened? A make a contract with the unsound mind. So in that case, these making a contract with any unsound mind, any drunkard. So these contract are void app initiative. They are from the beginning. Okay, so the ABC, and the bilateral mistake is a bilateral, that means the mistake by one side. Okay, that sorry, two mistake by the two side, by both the seller and the buyer. Okay, and the unilateral means mistake by the one party. Okay, this is by the one party, and bilateral means mistake done by both the party. So if the both the party knowingly doing the mistake, so it is not a kind of a void. Okay, and unilateral means in that case there is a somehow, but the most appropriate question is answering the option, only three option is given in the in your question. So that's why most appropriate A, B, C is most appropriate. A, B, C, option number C is right. Okay. Yes. Which of the following has essential characteristics of negotiable instrument? Okay. What is an essential quality of a negotiable instrument? So here, first it is this selling title to an bona fide transfer for the value and flexibility in the transfer, easily negotiable, or the easily negotiable essential characteristic we handle is okay. Then the transfer can sue in own name without giving a notice to the debtor. So what is the essential characteristic of the negotiable instrument act? That is the 4. That is, transferor can sue its own name and without giving a notice to the debtor. Okay, this is an also characteristics of, and one more character is also having, that is this is a most appropriate answer for this question, but one more quality having, that is a sales a little to the bona fide transfer for the value. It's also the characteristics of the negotiable instrument. Okay, now the next question which is in your screen, that is some bottle of the soft drink. Okay, here is the right answer is 4. Okay, I'm not mentioned over here. Now the some bottle of the soft drink was supplied by X and Y. Okay, some bottle of the soft drink were supplied by the X and Y. Y got injured due to the bursting one bottle. Y claim the damage from the X due to in which condition he is claim the damage. Okay, what he said, what is the condition? The You know that there is a soft drink. You know that if you move the soft drink too much, or if you're not properly take a precaution at the time of transportation of the soft drink, what happened? They due to more movement, due to very high movement, what is happening? The bottle going to be burst because there is a soda in that soft drink. Okay, so that's why. So this is a what? This is a condition of fitness or quality? No, ma'am. It's not a condition of fitness of quality. This is an how to carry that product. How much you are aware with that product, to how to carry it. Okay, the condition as to wholesomeness. No, ma'am. Okay, the condition of as to the merchandise, and the condition of the sale by description. So in these two options we are going to be confused. So I will explain you one by one. So what is the condition of the merchantability? Actually, the merchantability implied only where the sale is by the description, and the goods should be of the merchantable quality. Merchantable quality means a transferable quality, or the how do you transfer it? Okay, that is quality. And and what is the next one, that is condition of the condition by sale of description, where the goods are sold by sample as well as by the description. The implies condition is that a bulk of the goods and supplied must be corresponding both with the sample of the description. Okay, so the description in given in that product, so you have to mention, you have to be careful about that description. So this is a condition of the description. So you know that most appropriate answer is, that is condition of merchantability. I'm going to also telling you about what is the condition of the fit as a qualitative. So this condition is applicable to the reasonable fitness of the goods for the particular purpose, and may be implied on the part of the seller for such buyer want them. So this is, if the such buyers want them, then this is related to fitness of the quality. Okay, and the condition of the wholesomeness, it's applicable in case of the establishing on the provision. There is another implied condition, that the goods shall be wholesome. Okay, so wholesome, the when the conditions of the goods in the wholesome quantity, in that condition, if wholesome means, in simple word I will telling you, X is decided to give 1000 units of a soft drink, but what happened, the Y get only 900 units. Okay, so in that condition, here the Y can sue to the X. Okay, so this is a wholesome. What he mentioned, that he is supplying the 1000 units, he must supply the 1000. Sorry, 1000 units. Okay, 1000 units. Okay, sorry. There is some tongue slip. If A decided, agreed to in the condition that he supply the 1000 units to the X is supply 1000 units to the Y, so he must supply 1000 of units to the wine. Okay, so this is a wholesomeness. Okay, fitness of the quality, fitness as a quality, the goods which are, that is cold drink, the mention, the description is given in, that is a, this is goodness for the fitness of the quality, having a F I. Okay, mark. Okay, so this is the fitness of the quality. Yes, the condition of merchantability. So thank you so much. We have completed here, and we will meet you soon in the next part of the legal aspect. Okay.